Good morning, welcome to Trade Live with IG with myself, Rich McDonald, and my good friend of about 17 years, Ravi Purohit.
Thanks for having me on.
How are we doing? Do you want to introduce yourself to the world, Ravi? Or do you want me to do it?
I think you're going to have a funnier story. You go for it.
No. You go first.
So we were talking about this last night, I think. So I guess the easiest way for me to explain it would be four key parts of my career. Rich as broker, first, the most important part.
Then, he eventually got to broker. He was the
junior broker.
The junior, yeah.
The deliverer of lunches.
His boss used to call him the gopher. I'd say, why'd you call him the gopher? Because I just get him to go for this and go for that.
Then turned around some listed businesses, built a managed service business for an accountancy practice, and now I work for a Greek family office.
Greek family office, and that is why we ended up down in Santorini a couple of years ago at Ravi's wedding.
Yeah. So the way I think about it is I've gone from buying Rich's dinners, begging for business, to being bought dinner by Rich last night. So I've definitely made it.
The world's changed. And a very good morning to your wonderful wife, Becky.
Yeah.
I'm sure will be watching.
I think she said she's one of the first ones on, sending me some tips for speaking clearly and slowly. So thank you.
So Becky, any funny stories, feel free to come into the chat room on YouTube and give us those. Good morning to you all. We've got away from the numbers in Andrew McKelvey, Steve Davies, also Funky Gibbon. Maturin now. Maturin should be starting to get nervous because there's a rumour that Maturin might be coming into the show on Friday. And so, yeah, are you excited, Maturin? There, you'll get to see. He will be unveiled, the leader of our Discord, the creator of our Discord, coming to you on Friday. Andrew McKelvey, good morning. And the Welsh Ace. Yes, SSE have got numbers out. We'll go through those shortly. We'll go through BAE Systems. Still call it British Aerospace. And yeah, we've got another few things to look at. But what else is coming up on today's show? Boom, boom, boom. There it is. Oh, they've spelt it wrong.
To be fair, that isn't.
Come on.
That's not the worst spelling of my surname I've had. So I'll take it.
You just missed the P off the start.
It's all right.
I'm sure we'll fix that. So Ravi and I are going to be through with you till 8:15 when you get to guess the chart. And then Fast Markets, it's going to be Ange and Axel. So I think this is Axel's first time on Fast Markets. Then there he is, Piers Buckworth. As far as we know, he's going to turn up today. And yeah, little chance. And then at 9 a.m. we've got Andrew Webley on there. Is that confirmed, Phil? So I think I'd rather show Art of Investing there. So we'll see if we can change to an episode of Art of Investing rather than Andrew Webley, because the stock's already moved. It's already up 23% from when he was on. So you let us know in the chat what you'd rather see. Would you rather see Webley or Art of Investing, or another replay of another show that we've done? Right, sir. So, first time we met.
Brilliant.
So Ravi's old boss had a lot of character, let's say.
I think that's fair.
And yes, there's many words to describe him.
Yeah.
But yeah, character was certainly one. And he said to me, "Hey, Rich, what are you doing this weekend?" I said, "I'm actually going away for a weekend with my girlfriend up to Newcastle." He goes, "You've got a girlfriend? I've got a gift for you." I said, what do you mean a gift for me? He goes, "I've got a gift for you. I'm going to send little Ravi round with it." And I said, "Well, who's little Ravi?" "He's my gopher." So sure enough, about 2 hours later, Ravi turns up at the door of my hedge fund. And he goes, hi, I'm Ravi. Very, very nervous.
Yep.
And I said, "Hey, how's it going, Ravi? Come on in." You know, he goes, "Oh, no, I'm just
here to drop something off.
My boss has told me to drop this off." So I look down and he's got a brown envelope, and I'm thinking, oh my goodness, what on earth has this guy sent me? The last thing you want is a brown envelope turning up at a hedge fund.
They normally get delivered home.
So tell us, what was in? So of course I opened the envelope, to see what on earth's in it, to see if I could accept it even. What was in it?
Well, I think so. My boss at the time thought Rich needed an extra bit of energy over the weekend, so we ended up hand delivering some Viagra to help make his weekend memorable.
2 Viagra pills. I'm 28 years old at the time. What on earth do I need these for?
I think that's the hardest 15 bips I ever worked for.
Oh, very good. I don't even know if you meant that to be as funny as it was. So of course, Ravi looks at me and he must be thinking, who on earth is this guy? And that was the start of our beautiful friendship. So I think about a year later, Ravi had worked his way up and, you know, was very impressive. Went from just getting the coffees to like starting talking about trade ideas and stocks, delivering the news. And so eventually he said to me a year later, is there any chance we could go out for a coffee and just talk about my career?
Yeah.
And we sat in the Mandarin Oriental bar and you told me your plan to take over the world.
Yeah. And you backed me then and you back me now, so I'll take it.
Yeah.
I like to say Rich taught me about the markets and how to think about them, so... Yeah.
Well, we'll find out this morning.
Yeah, God.
So let's go into overnight action and see what's happening out there. Well, we had an interesting session yesterday. So the Nasdaq was nervous. I would say would be the best description for it. So you can see. Let's just take you back to Tuesday there. So ever from, about 2 o'clock in the morning yesterday, we had this sell-off, and that sell-off got down to a low around about, once again, the European close. And this is becoming a kind of recurring theme. The market's clearly nervous about AI. Right, and that's we were watching CNBC and the taxi this morning, and that's all they were talking about, wasn't it?
That's all everyone's talking about.
What's your thoughts at the moment on this unproven but so important sector that's going on?
I think you've put it well. It's unproven, but it's hard to bet against.
Yeah,
it's like trying to be short Tesla, isn't it? It's just going to keep biting you. And I think the problem is there's so much. There's news out there about Michael Burry's view on AI, about the clever accounting that's going on around the depreciation of chips. And if you looked at it from a purely valuation perspective, you think actually it doesn't stand up at these levels, but we keep moving higher. And even bad news is good news. So you can't. I don't think you can afford to bet against it at the moment. And
it's a bit, and one of the reasons we'll move on from this quickly is because it's getting so much time in the coverage that people are forgetting about other stocks. And they're forgetting the fact that the good old FTSE 100, without any AI stocks in it, hit a new all-time high yesterday. So the FTSE really going absolutely gunning it at the moment, and yet again this morning we are higher again, and it just continues, and it's fantastic to see because it feels like real stocks and real industry and real earnings growth on a reasonable multiple. Yeah. There's another couple of relative to the Nasdaq, you've been looking at something, haven't you? Let's have a look at the Asian moves overnight and see where we set ourselves up for today. So Ravi, take us through the Asian moves there.
So I think broadly flat. You've got Japan down just under 0.5%. Japan up just under 0.5%. Hong Kong up just under 1%. Yeah, but so broadly flat. Is that how you'd read that?
Yeah, it's positive. The Nifty, of course, the best performer. Some people may have spotted that you have particular knowledge in the Nifty. What are you thinking about the Indian market at the moment?
So in terms of global economics, I think India is definitely one of those economies that's going to get a lot of attention and a lot of growth. Just being out, I travel a lot out there over the last 6 or 7 years. And on the ground, I'd go 2 months between trips, and every time you'd land, there'd be another BMW dealership or a Lexus dealership, and that's a real genuine sign that you're seeing a massive improvement in the middle class.
Yeah.
I think so in terms of in line with that around government policy, their version of VAT rates reduced, which will help consumption. You've got income tax rates have increased, so more money in the back pocket. So everything's leaning towards a better, towards strong performance out there. I think what you are seeing is foreign investors, they have been net sellers over the last year, but I think last year in 2024, the markets out there hit a pretty decent level. So maybe that's just profit taking, I don't know. But I think from a global economic perspective, it's definitely a market to keep your eye on.
Yeah, it's one that I've got away, kind of feel tucked away in my pension for the long term.
Is it in the Art of Investing portfolio? Have you got
It is in the Art of Investing portfolio as well. That's right. Good knowledge, Ravi. And let's have a look at the MSCI index. And you can see it had a huge run in, go out to a longer weekly there. This graph's not going to go back as far as I want it to. Let me just see if there is one that shows us the real run up that we had in 2022. Yeah, there we go. That's better.
Look at that. It hit a massive peak in 24, didn't it?
Yeah, right from 21 up to the middle of last year. Incredible performance. I mean, we're talking about up 100% there. But since, it's just flatlined a little bit. And then obviously Trump didn't help with his tariffs.
Yeah. But I think also you are starting to see, at least some of my friends out there are telling me, you're starting to see tech companies IPO with kind of mirroring the States, basically very little in terms of bottom line profitability or even loss making, IPOing at big multiples. So, keep an eye out, I think.
But it's another Asian market that you've got your eye on at the moment, isn't it? What's a trade that you're considering at the moment?
So, FOMO's a real thing, as you keep telling me, and as I keep experiencing. So I was like, okay, the thing I've been thinking about is how do you get into the AI trade if you're nervous about the overall market? I'm trying to steer clear of the word bearish because I think you said there's a room full of them last night.
Yeah, that's right.
And so the trade I've been doing some research on, and not my idea, but I'd heard about it, was short South Korea, so EWY, long NASDAQ. So since April, EWY's up 100%, but NASDAQ's up only 50%.
Right.
So, but the EWY plays effectively on two stocks, Samsung and SK Hynix. It's basically all around the AI memory side of the AI play. Now, what it looks like is that's kind of run its course. It's almost doubled the NASDAQ performance in that period. Both benefit from the AI play. But it does feel like South Korea's kind of run its course. Now, if the market stumbles from here, and also South Korea's right in the middle of this, of the ongoing dynamic between the US and China.
Yeah.
So if that doesn't fall the right way, then I think you've got much more downside performance coming from South Korea than NASDAQ, because NASDAQ's got a lot more diversification in it comparatively.
Yeah. Yeah, it's interesting. That's one I haven't thought about.
But not trading advice.
Yeah, of course not. We'll keep an eye on that one. Shall we start to have a look at these numbers that have come through this morning? Then we talked about BAE Systems. So let's have a look there. How those numbers have come out, and they have reaffirmed upgraded guidance. So of course they upgraded guidance previously, and they said, things are still. Look at that beautiful Italian Air Force Eurofighter. That's great, isn't it? There's one of those in the museum up in North London, and so you get to stand very close to it, and they're incredible machines. But there you go. So BAE secured more than 27 billion in new orders in 2025, and additional deals expected before year end. Recent contracts include 4 billion sterling for 20 Typhoons from Turkey and 3.3 billion in a US electronics program. What about the numbers though? Well, they expect sales growth of 8 to 10%, up to between 30.5 and 31 billion sterling, and profit up by between 9 and 11%, up to 3.3 billion.
Yes.
So yeah, chief executive quite happy. He says strong order backlog, established positions on key programs, and continued investment to support our future growth. We're confident in the outlook for our business. Now this plays into something that Bill Blaine was talking about yesterday. Of course, I hosted a fireside chat with Bill to about 40 clients yesterday, and it coincided with the launch of the Spitfire Strategic Capital Fund.
It did.
So this is a brand new fund that Bill is a big part of, and it's going to be looking at private credit opportunities, private equity opportunities as well, in that space, in defense. So I'm sure Bill will tell us more about that on Friday, but it does, kind of play into this new structural theme that we've got in Europe.
It does. But I think also there's been lots of talks of Europe and the UK having to fund conflict themselves rather than straight out of the US. So that helps that play. And it also just from on the insurance premium side, you're not really seeing much diminishment in war premiums. So all of that seems to suggest that actually defence sector might benefit as a part of ongoing conflict over the next year or so.
Yeah, it's tough, isn't it? Because the sector's had such a run. If we look at Wisdom Tree European Defence ETF, here we are. Now let me get this into the right chart, and yeah, let me see if I can.
I'll never believe anyone who says you can't do two things at one time.
Yes. Well, I was having a great dinner last night and having to listen to you at the same time, so that was tough enough.
How did you do it?
Without yawning.
You did well. You did very well.
So yeah, there's the Wisdom Tree Defence ETF. We saw, of course, the April lows higher. It peaked in the start of October. Then we had the chance of, are Russia and Ukraine, are we going to see some peace there? It hasn't established itself as a good chance, but the sector hasn't really recovered, which is interesting. Is that set to go again, or has the focus been taken off it? I don't know. We'll see that one in the days ahead. What do you guys think in the chat? Is that the poll of the morning? What is the sector that you would be most comfortable in going through year end? Would it be defense? Would it be AI? Would it be Vodafone? Or another one? We'll let Phil have his only time will tell on the other one. Hey, we're treating him this morning.
Yeah.
Front page of the Times then, what else have we got? Ravi, any stories that jump out to you there?
Trying not to talk about AI, but the waking up to the Softbank news.
Yeah. Now take us through what happened there.
So from what I could see, Softbank's basically sold its stake in NVIDIA to double down on its position in OpenAI.
Yeah.
Which quite strangely, rather than necessarily impacting NVIDIA, has hurt the Softbank stock.
So Softbank down 3% overnight, whereas NVIDIA, what did NVIDIA do? NVIDIA was down 1.7%. So Softbank have sold their entire stake to double down on their AI stake. And that's Andrew McKelvey.
Yeah,
that's a good
gold
point.
miners, yeah.
Gold miners, yeah, that's a good shout. If you haven't already, he's put the poll out already, sorry. Yeah, he's gone for mining. Yeah, no, he's good foresight, Phil. Yeah, so SoftBank down 3.5% because they've sold their NVIDIA stake, and they're gonna. So people are definitely worried about OpenAI, aren't they?
Yeah, I think also the recent interview, I think was it by their CFO or somebody who's not Sam Altman, talking about needing a backstop from the US government wasn't necessarily very helpful, but it does feel like some of those businesses are getting a little bit too big to fail. So
yeah, oof. Right, what are your other alternatives then? Well, your other alternatives outside the sectors that we've mentioned there in the poll could be healthcare, because I enjoyed a wonderful meal with what was it we had? I had chicken tikka masala.
I think I had a lamb shish kebab.
Lamb shish kebab, great. Little India in Gloucester Roads was certainly filled us up. But I got back and saw my P&L had changed on the app, and that was because Pfizer had a huge day yesterday. And if you remember, I went into these after Piers was on the show, probably about 2 months ago, and it's been a pretty crappy performance for the 2 months, all truth be told. But yesterday, you can see that they started rallying there on the US Open, and quite an incredible performance. It wasn't just Pfizer, it was also Novo Nordisk as well, which I held. And this takes me on to how the portfolio is looking at the moment. So you remember I was hemorrhaging money being short the S&P calls. If you remember, I was short the 68s, the 6850s, 7000s. So I've managed to take that exposure down a lot as the market has come off in recent weeks. And I think we worked out, I was down about 25,000 in these things, which was, starting to get pretty bloody painful. But you can see how much that's changed. So I've taken the 6850s off completely last Friday. I've taken the 6800s right down to only short $10 a point. It was short 50. And those losses have now come in. So 6, 7, 8, 10. So the losses have come in to about 10,000 from 25,000. But I had a really decent day in Pfizer yesterday and a decent day in the futures where we were long delta against the short options on Friday and Monday morning. So having made back the vast majority, the eagle eyes of you will see that my P&L is now about as flat as it ever could be, up £10. I've decided to try and take exposure down. So I've now taken Pfizer off, not because I don't necessarily, it's not that I don't believe in the story, but I really want to get this down because I'm going to go on holiday in 6 weeks. And you never want to get your portfolio down in a rushed manner. So I've given myself about 6 weeks, especially into December expiry, because a lot of these positions will go off in December expiry. But I've still got Oracle, I've still got NVIDIA. Puma had a decent rally yesterday, right? So Puma, we know, I've got this one wrong completely. I'm still down 800 euros in it, but it's been a euro lower than here. So I'm now going to, and I hope IR's in here watching because I know he's got the same position. I'm now going to put a stop in it. So 16.25, I will be out of this. Or if it gets back up to half the distance between where it is now and where I put it on. So that's 1782. So as I say, I want to take positions off. And what did you say there? 16.25. Why is that? Why is the system not taking those?
There you go. 1782.
Just disappeared, didn't it? Oh, that's weird. Well, we'll check those are on there. But that's the plan now. Because Ravi, when you're managing a portfolio, that kind of thing, you don't want to be pressured into things, do you? You want to feel like you're in control of it.
Agree. Otherwise, you're just pushing the price, which, or you always feel like you're chasing the price, which isn't a fun feeling.
Yeah.
So, just a question for you, Rich.
Go for it.
What's your portfolio saying about? We've talked a lot about what your view is, come the back end of the year and probably up to Q1. What's your portfolio saying you think happens from here?
So the P&L swing will mostly still come from those S&P positions, right? So what I'm essentially saying there is, right, fine. By by March, I think, yes, we can go 350 points above 6,800, but I don't think we go more than that. And again, the 7,000s are already trading at 230. So we can get up to about 7,200, and I don't lose any money on those, right? So I think the market is capped between 7,000 and 7,200. Now, if we do want to go higher, I want to make a little bit money from that. So I'm still long Marvell. That's one of Piers' ideas. Softbank had actually entered into bid talks with them.
Yep.
Nothing came of it, but it just shows you the value of the business. I'm long some Nike because I love Nike. It also had a good day yesterday, up 3%. We're long a bit of NVIDIA, but that's against an NVIDIA short calls position. So I'm saying NVIDIA, I do not think goes above 210.
Yep.
But it might get up there, so I'm long a little bit of stock against it.
Yep.
And then we're long some gold through options, and what else have I got? And then Oracle. Oracle, I have just traded terribly, absolutely terrible. And at the moment, I'm short the 250 puts. Oops, sorry. And I'm long, short the 250s and short the 290 calls. So I think Oracle has a little bit of a relief rally.
Okay.
And sits somewhere between the 250 and the 290. But at the moment, it's at 237.
So you're thinking, markets-wise, that we rally into the back end, we go up into the back end of the year?
No, it's saying that if it doesn't rally at all, I make a hell of a lot from all that option premium all coming into me.
Fine.
So I think we either go sideways or they always try and push the sign to rally.
Yep.
But I'm not short here at this level.
Yep.
So I'm just, options are great because it gives you that little bit extra room to be wrong.
Yep.
And I love making money from being wrong. Yeah, Viking Therapeutics, Funky Gibbon, huge day as well. So we're going to speak about all that with Piers later. We're going to take a really quick 1 minute break there, and we'll be back to ring the opening bell. Hit us up with your thoughts on the poll. We got 51 votes already. We'll be letting you know what's coming up there as well. We'll see you in 1 minute.
Hello, I'm Axel Rudolph, Senior Technical Analyst at IG and Fellow of the Society of Technical Analysts with over 30 years experience in trading the financial markets. Every Monday I break down a carefully selected trade setup live in my Trade of the Week. Whether you're new to trading or have years of experience, Trade of the Week will help you to generate powerful trade ideas and execute them with precision using stop losses and profit targets. So if you're looking to enhance your skills and boost your confidence in the markets, join me every Monday for my Trade of the Week live on Trade Live with IG.
Right, let's go through the opening moves then. We are seeing SSE down 1 to 2%. That's on H1 revenues of 4.6 billion sterling, H1 net profit of 292 million. But as Andrew says there, they are raising 2 billion sterling via placing to fund its 33 billion 5-year investment plan. So you are getting stock coming to you. We'll look at that more after we get the bell. Jet2, that's up 2%. Your kind of holiday there.
Yeah, definitely.
Ravi, says the man who got married in Santorini. BA Systems, we're looking at market, so maybe up, small up there. And yeah, Marshall's up 5%. Taylor Wimpey down 5%.
Okay.
So trading update there. Guidance maintained, but may see low double-digit downgrades to full year 26 after the numbers. So bad numbers from Taylor Wimpey. We'll be watching that on the open, looking down as much as 5%. Ravi, as the guest, you can ring that bell and open the London.
Here we go.
So that's us off and running for the day. We're watching SSE, we're watching BAE, and we have, of course, got a FTSE that's small higher as well. So expect most stocks to be flat to small up as they're opening.
There we go.
Ravi, take us through the losers there.
So Permisson down, just so the house builders, Bellway, WPP, down 0.5%. Oh wow, Permisson's taking a bit of a hit already. Barrett Redrow, BP, IG, and the hotel group all down this morning.
We're not allowed to mention that one.
No.
Well, you are. You're a guest.
Yeah, apologies, guys.
Technically, so am I.
Yeah.
HSBC up 1.11% at £11.11. So there you go. All the ones in HSBC. That has had a great few days.
So it's having a little bit of a bounce after yesterday's interesting news article.
What do you think of that one?
I think whoever got the deal done with the union got a hell of a bonus. Whether they're having to pay it back now or not is a different question.
Whitbread also paid out nicely yesterday. I had that on my book. Another one that I've taken a bit of profit in. So Whitbread is now off the books at 28.75. I let that one go. What else? Have we got any? There we go. Right, Vodafone giving some back after a huge run yesterday, up 8%. There you go. Enjoy those crickets while you're dancing in your money from Vodafone.
Wow. Yeah, financial seems to be doing well this morning, and then you've got the home builders and some of the utilities.
I'm guessing Taylor Wimpey not open yet. Also, is SSE open, Phil?
No.
And do we have a early look at BAE Systems?
Burberry for that. Burberry up 2%.
Burberry up 2%, and that's ahead of numbers tomorrow. What was that? Sorry, Phil? BAE down 0.5%. Right. Diageo. You're not too much of a drinker, are you, Ravi?
No.
No. Enjoy a Guinness?
About one is all I can handle.
Right.
But
nothing's changed.
No, absolutely not.
So,
just waiting for my wife to say something funny about that on the chat.
Tell us quickly. Right. I know we're on the open, guys.
I know exactly what you're going to say.
So, back in the day, we used to go out to a nightclub here and there. We went to a place called Mavida. Now we walk in. This is a fancy place, right? It's right just off Oxford Street. And Peter Crouch and Abby Clancy were there. Abby Clancy, oh, wow, goddess. So we, but you know, I think we got a bigger table than Peter Crouch.
We did.
We had to get a big bottle to get that table, Ravi. What kind of bottle was it?
I think it was a Magnum. So no, it was what's the even bigger one called?
An Ebenezer.
Yeah, it was. This thing was absolutely huge.
Of what?
Dom Perignon? Was it Dom Perignon?
Right. And what happened?
So I must have been midnight, 1 o'clock. We're all having a good time. I apparently was having too good a time, and fell over the entire table of Dom Perignon and champagne glasses. God knows how much the bill was, but I don't remember getting a big bonus that year.
Did you break the table?
I think I did. The table, the champagne, the glasses. I think the lights came on, the music stopped.
As soon as it happened, I got my jacket and left. I'm like,
me and you both.
Either we're going to be thrown out of here and never allowed back, or you were going to get carried out no matter what. But I thought, right, that's it. Great, that's the end of the night. And off we went. It's the funniest thing I've ever seen happen in a club.
Yeah. We did go back the next week.
Back to the markets then. What are we seeing? There's still no open from Taylor Wimpey. But Rio's is having a good morning. Rio's up 1.2%. And interestingly, not really the rest of the miners. Antofagasta a little bit. Yeah. And Glencore. Right, let's start to check the stocks that have had numbers then. SSE, no opening yet. Let's have a quick look to see this retail offering. It is looking to spend 33 billion on a 5-year plan. The stock issued new ordinary shares of 2 billion, and it's being funded. This is a big plan, isn't it? 55% or 21 billion sterling of operating cash flow generation. That's half the plan. And then 35% or $14 billion will be an increase in adjusted net debt or hybrid capital.
Let's use the word hybrid capital.
5% of it will come in an equity placing. So
it's hard to really argue the idea though, because even if you ignore AI to some extent, there's still a massive energy requirement. So
this is the
energy infrastructure play.
Big plan.
Yeah.
Right, it is open, up 9%. SSE, we talked about yesterday, coming to a breakout level. And oh my goodness, have they broken out. Look at this. The stock at £21.50. My aunt will be very happy because my aunt used to work for SSE and has the stock. Look at that. Of course, Scottish and Southern Electricity used to be Scottish Hydro. The first stock that I ever owned on my 16th birthday was Scottish Hydroelectric, was given it from my father, my own share certificate with my name on it. So I'm very happy to see this morning. New all-time high. Let's go back to the monthly chart and see where they were when I got that. So 1996. The chart doesn't go back that far, of course. But at last. And that is why the FTSE 100 will be hitting new highs again today.
I can't remember how many times you said in this last week. When is it going to hit 10,000?
Oh, well, so my hat it's been sent out. So it's going to get delivered potentially today. FTSE 10,000 on it. And
there you go. Friar Tuck, you're right, it was a Jeroboam.
Was it a Jeroboam?
Yeah.
Friar Tuck was there, was he? Right, Taylor Wimpey is the other side of things, not so good. That's the monthly chart. Let's look at the daily one, and that is brutal, isn't it? What about a pair trade on the two of those?
Wow, yeah, that's a hell of a move. Not a great outlook for the housing sector.
So just if we're looking at year to date for Taylor Wimpey there, yeah, not a pretty sight at all. And that tells you what the home building looks like under Labour.
Yeah, I think the budget's going to be the big bit of news over the next few weeks.
Yeah.
I think someone in the chat said Avon up 5%.
Are they really? Let's look at Europe then, Ravi. What are we seeing on the European indices?
RWE up close to just over 3.5% now. Nice move. Ubisoft just under 3. Adidas and Puma up small this morning. That helps your idea. Helps your portfolio. You got Porsche, VW up over 1%. Most of the automotive. Mercedes just up under 0.5%. LVMH.
And what about on the downside? That's just Eon.
Yeah. Wow.
Interesting. So RWE up 3%, Eon down 1%. God, you feel a bit hard done by if you've got that one this morning in the portfolio and not SSE or RWE. On the commodity side of things, Ravi, let's have a look there.
So oil down small, I'd guess. So you've got spot silver's about flat, iron's up.
Yeah, iron ore. So that's why Rio Tinto are strong this morning.
That was your trade from back in the day, I think.
Yeah.
High-grade copper, pretty flat. Nat gas, same. And then soybeans up just over 0.5%.
The unfortunately, you were not my favourite person to have traded Rio Tinto with.
I don't believe that for a second.
Samuel L. Jackson, we managed to trade some Rio Tinto with. I've got the clip. I'll have to send it in one day and we'll show it. But Samuel L. Jackson and I did a trade in Rio Tinto for a charity day. That I think it was BGIC that were doing the charity day.
Okay.
Right, and then currencies. Currencies a little bit dull this morning. No big moves there. Yen getting towards 155. But yeah, no big moves, no breakouts, and consolidation in sterling yesterday after that weak employment number.
How's that? I think one of your guests from, was it last week, Trade of the Week, what was that currency trade for Trade of the Week?
Yeah, Axel, oh my goodness, SSE's gone again, up 11. So the market is really liking this.
And they back that infrastructure play.
Yeah. So, you know, to see a company talk about an extra 13 billion of debt, you know, and increasing the debt to invest, that is really reassuring.
I think because it adds into a wider geopolitical issue around energy. So, can't understand the move.
R6 Sena has got SSE. Well done, R6 Sena. Is it worth holding long term or book profits? Now, that's very tricky because you know, this is what you'll be getting is a lot of strategy days, I would imagine. There'll be a lot of brokers commenting on this. I'm just looking to see if we've got anything from Numis yet on the SSE story. Here we go. New strategic plan. Right, so this is hot off the press from Numis. They think most investors will be relieved to get the equity overhang out of the way, and the stock rallied earlier this week on reports it was being considered. The key element of the new strategic targets is for EPS guidance of 225 to 250 pence in 2029-2030. That's likely to be seen as positive, evidently, from the stock move. So then you've got CapEx. Guidance is at the midpoint of the, at the midpoint, and this is the important piece. At the midpoint of new guidance, this would put the stock on 8.3 times PE in 2029-30. Right, that's at the midpoint of guidance. Of course, you never set guidance to miss it. You set it to beat it.
Yep.
So, you know, the midpoint, that is good. So SSE, just a real, a strong and stable part of your portfolio with valuation there, 8.3 times in the future, 4 years away, albeit, but remember, you're getting nice chunky dividends as well. I'm not sure what they've said about dividends. I'm going to have to, the dividend policy has been reiterated with 5 to 10% CAGR from an unaltered 24-25 baseline. So they're continuing to give you the dividend. And yeah, this,
how does it?
I can see why it's up 12%.
Yeah. Andrew McKelvey doesn't think we go further from here. He's opened a short on SSE.
Well, yeah, I mean, I wouldn't look if it's a short term, I wouldn't argue against it. The problem is that you're going to have a lot of brokers coming out with upgraded guidance over the coming 3-4 days. So personally, I wouldn't hold it overnight because tomorrow morning
you see some relief in the stock.
Yeah, and you don't know. There's always one broker that will come out with like a £30 target, something like that. So. Good stuff. Julian's got it as well. Excellent. Really happy to see you guys have benefit from this. R6 Sena and Julian, well done. Good stuff. Right, it is 8:14. Ravi.
Thanks for having me.
Thank you very much for joining us.
I feel like I finally made it.
You gonna come back sometime?
Oh, absolutely.
Good stuff.
You pay for dinner, I'll be there.
Well, no, hang on a minute. We'll see. Producer Phil, we'll invite him next time. He can pay
love
for
it. Perfect.
Wouldn't even pay for coffees yesterday.
No way.
I said to him, Phil, do you want a coffee? Right. So I normally get them, or Ange gets them. And I say, right, give us your card then, Phil. And he went, oh, no. There's a perfectly good coffee machine.
Hey. Bloody hell.
So do you think I still got him a coffee? No.
To be honest, I'm shocked that Rich is buying the coffees. Normally, you have someone else to do all that. So that's,
Yeah.
we've both come a long way. Time to go. Time to go. Time to go.
Big shout out to Evie as joining the gang this morning. So she is in the gallery along with Cam. So we got a brand new. Who's this coming into the chat there?
My wife with a closing comment. Don't leave him in charge of the champagne. Thank you very much.
He did better at the wedding with the champagne.
I did. And she doesn't, just for clarity, does not leave me in charge of the champagne at home. So.
Good stuff. Right, Ravi, thank you very much.
Thanks,
Great to have you on.
Thanks,
and Axel and Angeline will be here in 2 minutes. And then, if he turns up, Piers Buckworth in about 20 minutes. See you then.
Rich was charting lines with a fevered hand. Angeline had coins like castles in the sand. They asked me, Phil, what's the play today? I leaned back slow and I had to say, only time will tell if the bull will charge or the candle fell. You can draw your lines and plan your spell, but in this game, my friends, only time will tell. But look at that breakout, Phil, it's a sign. The RSI's low and the setup's fine. I've seen breakouts fake and crashes climb. Patience, kids, trust the test of time. Only time will tell if your gains will swell or your hopes dispel. You can hedge and guess and wish like hell, but even the wisest chart needs time to gel. You might ride high on a Monday morn, only to crash for the coffee's warm. I've sold too soon. I've danced with bears beneath the moon. Only time will tell if the trend is true or just rebel. No crystal ball, no wishing well. In stocks and trades, in winds and spells, only time will tell. So take your trades, take your tea, just don't take it all too seriously.
Hey, trader friends, welcome to the show with myself and Axel Rudolph. Axel, how are you?
I'm fine, thank you. Hello there.
Hello. Let's do guess the chart first because we have, of course, a winner, I believe. Let's have a look. The chart was Tesco, and first to get to the answer was Pilatus again. Did you guess it, Axel? We're not allowed.
No.
Did you?
No.
Right, let's get through fast markets because we have a huge amount to cover here. Let's take a look at the FTSE first. I'm going to zoom that in for our viewers. SSE up 12.5%. You already heard Rich and Ravi talk about that earlier on. Let's have a look at some of the other movers. Do you want to take us through them, Axel?
Yeah. I mean, we've got some miners in there, haven't we? Doing pretty well today. And then banks, HSBC, you can see Standard Chartered, probably on a rate cut hopes after yesterday's dismal UK unemployment data, 4-year highs, unemployment at 5%, but that actually pushed the FTSE to a record high, as we know, because everybody's expecting the Bank of England to cut rates next time around. So banks benefiting from that. Apart from that, yes, I mean, Antofagasta, Anglo-American, obviously the gold price, silver price heading up again. Gold back about 4,100. I'm quite pleased with that one because without wanting to blow my own trumpet, we had that on as a trade of the week last week, didn't we?
Yes.
So, yeah, interesting.
Well done you if you followed Axel's trade of the week. Also, those of you that are in Sarabi and Greatland Resources like I am, you are likely to have heard me say yesterday I took profit on Sarabi because I managed to get to my 10% target. Yes, it did rise again. Those of you that messaged me and said, but it continued to go higher. Thank you very much. But, I'm not going to have any FOMO there. Let's go to the losers as well to see what is happening on the Taylor Wimpey, down 3.7% again. Now, this is a stock that, like the rest of the home builders in the UK, continues to hurt. Any thoughts on Taylor Wimpey, Axel?
Yes, I mean, the thing is, a lot of people try to fight the trend. And if you look at the Taylor Wimpey chart, you can see that it's been going down since September of last year. It's been on a downtrend. And yes, since April of this year, it's sort of bounced back a bit. But it's just resuming its descent. And now that we've fallen through an uptrend line, I think from the September low, September to October high, it's just heading back down again. And the reason probably is that even though the Labour government in the UK is really trying to remove a lot of the red tape for house builders to achieve its targets with regards to buildings being actually built, well, it is a slow process, and there are a lot of other headwinds, which basically mean that the house builders in the UK, and not just Taylor Wimpey, continue to underperform other stocks, hugely underperform the FTSE 100, and yes, remain mostly in downtrends.
And that's right. You look at the others as well. Persimmon, you'll see a similar trend there. And also Barrett, Redrow, taking a look at that. With Taylor Wimpey, of course, it's those softer sales growth numbers. Of course, this is the key autumn selling season, and it has been very, very slow indeed, according to sets of data that I've seen. Many buyers holding back because of concerns over the incoming budget and, of course, property tax hikes. Do you like a drink at the pub, Axel? You like a drink at the pub as much as I do? I think I drank a bit too much last night.
Yeah.
We missed you at the event last night. There was an IG Prime event with organised with Bill Blaine there. Many of the clients asking after you, Axel. Mohan was there as well. I hope you're listening in, Mohan. Let's have a look.
Sorry that I missed you.
I said many of our clients asking after you at the event last night. Fuller, Smith and Turner, speaking of pubs and drinks, it is up more than 3% there. Fuller, Smith and Turner saying that Christmas bookings are looking up 16% ahead of year-ago levels. Also 28% jump in its half-year pre-tax profit. So not shoddy at all, looking quite bubbly there.
Well, it depends, because if you zoom out again, you will see that the picture is slightly different from the highs we see here. So yeah, we're trying to build the bottom here from a technical perspective, and as long as we hold above the recent lows here, we may be in a position to see some further upside in the short term at least. But if you look at the chart, it is still not looking very healthy. Not like other charts, like Rolls-Royce, for example, still rising today. And has been rising. I think I wrote something on Rolls-Royce yesterday or the day before. I mean, it's up 975% in the last 5 years. Nobody really talks about it. Everybody talks about NVIDIA being a $5 trillion company, but look at the Rolls-Royce share price, and it keeps on rising, and exactly. And now it's flattened out a little bit over the last few weeks. But it's still looking very healthy, and this is really a sort of trend I love investing in, because basically it just keeps on giving.
Yes, I have a fond place in my heart for Rolls-Royce, and I'm sure a lot of you as well. I believe it's Jesse 14 and also RSAX. Do you still have Rolls-Royce there? There was once upon a time, I invited a friend, and it was a campaign with regards to fractional shares. That person got BMW. I got Rolls-Royce. On that note, lots moving in the commodities space as well. Taking a look at that there before we head over to Germany. Natural gas, if you are listening in, Lawrence of Bunzel, that is down slightly. Also gold, as you heard Axel mention earlier, holding around 4,100 and just shy of 4,130 there. Silver, palladium, platinum, all those starting to move higher as well. Those of you that bit on a stick like me when I was away for the 2 weeks in October, well done you, because they have started to come back online. We've got copper and also high-grade copper moving higher. Taking a look at Germany right now, zooming in on the winners list there, Axel.
RWE, German energy company, and doing very well. And you can see on the longer term chart, they are pushing higher, and up 4% today. So RWE looking really good, second from the top. Yeah, I mean, if you look at the chart, it's a chart again, which looks healthy, breaking up, and is, I think, if I remember correctly, testing now the December 2017 highs. So it's really trying to hit record high. Oh no, yes it is. Is it? No, maybe not. But yes, it's definitely breaking higher. So and trying to take out that resistance exactly here. Yeah. So that'll be interesting to see. Yeah, because if that breaks, we may well head towards the 6,000 mark or so on the daily financial bed on this chart here. But you can clearly see a bottoming formation here taking shape. And now the important point is, technically, can we break through that whole resistance area, which we're testing at the moment? But if you look at the last few days rally, and especially today's 4% move on top of yesterday's really strong move, it's looking quite healthy, isn't it?
Yeah, very, very healthy. Just drawing a rectangle for you there to illustrate what Axel is saying. This is, of course, Germany's biggest power producer. I'll be watching this closely as well because, as you know, Axel, I really like the power theme. This move coming after RWE, I believe is how you say it. Is that correct, Axel? Instead of
Riva,
RWE,
I think. I'm not sure. Is that
how they say it in Germany, or is it still the RWE?
I think it's Riva, but I don't know, to be honest. I haven't been to Germany for a while, so I don't know.
I'd love to find out.
RWE.
RWE. They reported higher than expected profit for the first 9 months of the year. Taking a look elsewhere, Commerzbank also riding higher. Both Chris and myself saying that, last week there were lower. Commerzbank not having any love after you left it. I believe you were at Commerzbank, weren't you? But look at that.
That was 4 years ago, yeah, but they've done very well since then, because basically by cutting staff such as me, they could increase their profits. So, yeah.
There we are. That's the monthly chart.
Back then, they basically halved the staff they had in London, and they also cut a lot in Germany. But clearly, as you can see here, doing very well and accelerating higher, trying to retest the highs we saw just a few weeks ago. so a few days actually ago. But yeah, from a long-term perspective, you can see that after the 2008 crisis, basically Commerzbank hasn't done that well, had to be saved by the German government. And yeah, on the longer term chart, it's trying to head back up again, but it's a slow process.
Yeah, it's a longer term chart. It looks a bit like a double diamond ski slope on the left hand side, but it is back up now.
Looks like a black run, doesn't it?
Yes, but steeper with boulders like the double diamond black runs in Canada. Right, we have just a few seconds ago, lots of people on the chat. Rico Siegel saying, can you ask Piers what his preferred means of shorting is? Option spreads, bets, or CFDs? Well, what do you know? Piers is up next. Thank you so much, Axel. Always a pleasure having you on. Everyone on the chat also saying thank you. We'll see you on the floor. Those of you, stay with us because we've got Piers and more coming up next.
Hello, I'm Axel Rudolph, Senior Technical Analyst at IG and Fellow of the Society of Technical Analysts with over 30 years experience in trading the financial markets. Every Monday I break down a carefully selected trade setup live in my Trade of the Week. Whether you're new to trading or have years of experience, Trade of the Week will help you to generate powerful trade ideas and execute them with precision using stop losses and profit targets. So if you're looking to enhance your skills and boost your confidence in the markets, join me every Monday for my Trade of the Week live on Trade Live with IG.
Do you like the sound of tax-free trading? Well, that's exactly what spread betting enables you to do. This tax-free way of trading lets you speculate on the price of over 17,000 financial instruments, like shares, indices, forex, and commodities, without actually owning them. With spread betting, you can benefit from both rising and falling prices, letting you find the perfect opportunity. So if you think the market's going up, you buy. If you think it's going down, then you can sell short. Not only is spread betting exempt from capital gains tax, but it's also commission-free. All you pay is the spread. With us, you're not alone. You're part of a wide community of traders that you can learn from. We've got the experts, the tools, and extensive educational resources to help you on your journey. If you're not quite ready to trade with real money, you can always give it a go on a demo account. Open an account today, join the conversation, and be inspired to make moves. Welcome to the Art of Investing, a brand new podcast to help you achieve your investing goals. Join me, Rich McDonald, and my co-hosts Mark Spice Holden and Chris CJ Fellingham every Friday when we bring you updates from the markets and insights from our combined 100 years of investing experience. If you're looking for flexible ways to trade financial markets, whether you're experienced or new to trading, you've come to the right place. CFDs let you speculate on the price of financial instruments like shares, indices, forex, and commodities without actually owning them. You can benefit from both rising and falling prices across 17,000 markets, letting you find the perfect opportunity. So if you think the market's going up, you buy. If you think it's going to go down, you sell. When trading CFDs, you're trading on leverage. Now, leverage lets you trade bigger positions with less money up front. So this increases your profits on your trades, but also remember your losses are also amplified. So be sure to manage your risk. With us, you're not alone. You're part of a wide community of traders that you can learn from. We've got the experts, the tools, and extensive educational resources to help you on your journey. If you're not quite ready to trade CFDs with real money, you can always give it a go on a demo account. Open an account today, join the conversation, and be inspired to make moves. Welcome to the Art of Investing, a brand new podcast to help you achieve your investing goals.
And I've seen at first hand the power of the wealth creation that one has been able to obtain from this industry. What we're going to do is we're going to put it into action by creating our own model portfolio.
We're going to be talking about the big indices that are around the world, because that is probably some of the safest ways for you to invest your money.
We need to bring this to everybody and help them then take control of their own investment story.
Join me, Rich McDonald, and my co-hosts Mark Spice Holden and Chris CJ Fellingham every Friday when we bring you updates from the markets and insights from our combined 100 years of investing experience. He's back. Yes, he's turned up this week. It's Piers Buckworth in Tech Focus. You're wrecking my head already this morning. He's coming here like a bull in a china shop.
Yep.
Ordering people around. I had lovely little Ravi on. So basically, Ravi was my broker before you, so he's better than you.
Yeah, okay. Cool.
Right?
Yeah.
And you just came
Wait,
in
won't
here.
tell you what you said off camera.
You discarded him. Right, okay, see you later, Ravi. I need to talk to Rich. Get our list done. How are you doing?
So good, man. Very good to be back. Lots to talk about as ever.
There isn't.
Let's just answer Rico Siegel's question. What is the preferred way of shorting? I get asked this question about 300 times a day from the retail universe. Every single major platform provides a CFD option, whether that be IG. Should we just stop there? Probably shouldn't talk about any other platforms, shall we? Just use IG. So yeah, that's the answer to that question. But yeah, listen, there's a lot going on. Markets are rotating and morphing, and there's it's actually interesting for the first time in a while. And I mean that because we've just dealt with the same grinding nonsense for quite some time.
And that's changed, hasn't it?
It has significantly. We've got some real companies now, cheap quality, unloved companies, particularly in the biotech space, the pharmaceutical space, that are waking up. If you look at the IBB, which is the US listed ETF for biotechs, it's actually absolutely ripping. And I was sending a chart. That chart's actually not a great one to look at. If you look at the 5-year chart, it's
5 year.
Yeah.
Right.
There we go. Look at that. Now we're talking. Right. So look at that. Look at that move. Right. There we go, guys. So there's a 5-year chart of the ETF that covers all the big biotech companies in the US.
Now, just take us through. Sorry. What's the difference between biotech and how big is that in the NASDAQ?
Well, first of all, biotech and pharma get confused a lot, and even by professionals. I actually explained this on my desk the other day. And there is a nuance to it, and many of these companies now cross borders. But just think about it in very simple terms. Pharmaceutical companies have generic drugs, most of whom. So let's take Pfizer for example. You know, all the over-the-counter drugs that we're all very familiar with that sell billions of pills per year, and they come off patent. And then the biotech companies are more research, off-piste, rare diseases. Then there's high growth, speculative. areas of the same industry.
Okay.
So think of pharma as boring dividend players with pills that we all know about, and think of biotech about companies that are potentially exciting, trying to develop new drugs in exciting new areas.
And this is the kind of thing that Cathy Wood would get involved in?
She loves this kind of thing. I mean, she's obviously been heavily involved in the gene therapy space with CRISPR Therapeutics, which is obviously a fantastic. I love that space. I used to follow this space really closely back in 2012. There's a whole bunch of companies that haven't moved much, like BioMarine, which are involved in rare disease. In fact, BRMN, which is a great company, are still waiting for their big catalyst moment. But you know, there's about 10 companies that you can look at in this space, right?
What was it called, sorry?
BMRN is the ticker, BioMarine. They make it's muscular dystrophy, essentially people with
no, that's not it, is it?
no BMRN is the ticker code. Anyway, so but the focus, you know, I've been taught. Let's just focus in. There's hundreds of companies. You can get lost in a sea of companies.
Yeah, guys.
I'm focused on Viking Therapeutics, and I think we need to just focus on this company. Stanley Druckenmiller has just come out with a filing saying that he's bought about a huge chunk of this company. Of Viking. Viking, right?
Is that why they were so strong yesterday?
Well, no, but the news came out. I mean, anyone who was reading, the news came out last week.
Anyone who can read.
Well, I mean, someone sent it to me this morning, and I was like, yeah, we knew that last Friday.
Right.
But look at that gap. Look how beautifully that's filled. And it's about to break out. When this gets above 42, which it is now, is this pre-market? No.
We'll get pre-market live on air in 20 minutes.
So Viking's fascinating. I've spoken about it for weeks on the show since it was trading about 24. It's not only does it fit into the rotation that I just talked about. Not only have they got a potential buyout from Novo, who are now looking for someone on the same molecule as them.
Well, no, that's just us speculating. Right?
No. I own this stock because I think they're going to get taken out. That is just my view.
But Novos have never said that they're in.
Novos have never mentioned their name in a public statement in that light. I haven't. That's not what I just said. I just said that now that they've not lost Metsera bid, they're looking for someone else, and these guys are in the firing line.
Yeah.
And on top of that, we've just got Stanley Druckenmiller, who's come out with a big filing saying he owns the stock. The boxes are being ticked. So I'm long and strong that one. Pfizer, which is a different animal altogether, but of course they just did win the Metsera bid. Market took a few 24 hours to digest that. But now, you know, if you listen to what the CEO's, he's very aggressive, right? There's a lot of pressure on Pfizer as well. Remember, these are part of those 5 companies that I was talking about last year in the US, big legacy quality companies that you know are going to be protected. I mean, Trump has kind of said he's going to. Trump made that happen, right, through the FTC, right? And he's helped, and he wants to help Pfizer. Of course, he wants to help Pfizer.
Well, he's not going to take a stake in them, is he?
Who knows? but I don't think him taking a stake in a company makes too much difference in it. But what it does help is from the regulatory environment if he wants to help them out.
Yeah.
Anyway, so Pfizer's looking good, and then of course you've got even Moderna.
And so can we just talk about how cheap Pfizer is?
Well, this is what attracted it to me. But listen, it's been cheap for a long time. It's a value trap. There's plenty of stocks that you could say were cheap for years and years and years. So there has to be a catalyst and a moment, a rotation. But those stars are kind of aligning. They needed to get their act together or do something positive in GLP-1. That's done.
I tell you what brought it home to me how cheap this is.
Yeah.
The chairman was on CNBC a few days ago after the numbers. And Kramer and David were asking him, look, what do you think? Do you think there's a lot of value in your stock? And he looked at them, and excuse me for what I'm about to say. He said, I think there's a fucking load of value in my stock.
Yeah.
And of course, Kramer started laughing, and everyone, do we just hear that right?
Wow. So you're allowed to swear if it's a direct quote.
Yeah, if it's a direct quote, that's fine.
Yeah, well, I mean, there is. All right, and they've got $15 or $17 billion of free cash flow, and they trade on for 8 times forward earnings. They are the very definition of value. And there's a bunch of them that are in this space that look quite good as well.
Shall we have a look at Novos as well?
Yeah, let's have a look at Novo. I mean, Novo has been trading as if it's the end of the world. What are they doing right now?
As if there's no fat people left.
Yeah, but listen, Eli Lilly have taken a lead in this game, which has stolen the crown from Novo. Novo have. And it's been a spectacular fall from grace. But you've got to remember, we're not dealing with a company who have struggling earnings. We're dealing with a company that is battening down the hatches, but they're on 12 times earnings. They've got loads of cash. They've got so much cash, they were trying to pay a 75% premium for Metsera.
Yeah.
right? So they're very, very fundamentally sound, and yet they're trading as if they're a junk stock. And that, to me, is a mismatch that I love to focus on. Now, it does require the market to focus. JP Morgan trading desk were pushing this yesterday. And that's interesting because their analyst wasn't pushing it, but the trading desk was pushing it. And I love it when I see that happen. But the analyst community are still very confused, but we all know how that works. Wait for it to go up 20%, and then they'll chase
they jump on board. That's exactly right. There you go. So it's on the smart score. It's only a 5. It's rated a neutral. And then out of 9 analysts, you got 31% upside on the target price. So that's Novos. If you are watching on TikTok right now, we're live on YouTube on Trade Live with IG. Live on YouTube, Trade Live with IG. Come on over and join Piers here.
That question on. Should we just jump over to Marvell? Because there's a question about it, or do you want?
Let's go straight to Marvell, because you're not the only one who's been interested in this for months and months. Now it turns out they were in bid talks.
Softbank did their due diligence on this company, which came out earlier in the week. I think it was Monday. No, it wasn't actually. It was last week. Sorry, it was last week. It's not. Listen, you have to put this into context. Softbank are a serial acquirer of companies. They've bought hundreds of them, and it's kind of a scattergun approach. Some have worked, some have not. But it makes total sense. You know, a client was asking me yesterday, what are they going to buy next? Right? It'll be in AI. It'll be in semis. Are they going to divest some of their ARM stake? I don't know. But if you want low-hanging fruit, Marvell is your low-hanging fruit. Right, and it's slowly being crept into the price, but we'll see what happens.
Just remind us what it is in particular that they've got like a monopoly on.
They have the high bandwidth custom chip. They do it. Marvell are the step brother or step sister of AMD and NVIDIA, and it's a very important point to understand. They're the only people, apart from AMD and NVIDIA, who are involved in acceleration in the data center. It's a specific thing. NVIDIA are the kings of GPU accelerators. They don't make GPUs, but they do it through a custom chip, and it's the same process, speeding up and making more efficient the process within the data center. There's 3 companies that do it in terms of that very specific bit of technology, and they're one of them. And the market they have other things in their portfolio, telecommunications, they've got exposure to mobile phones, they've got some analog stuff, they're more diversified and therefore more volatile as a stock, as a company. But the AI part of this story is not priced in yet, and so that's why it remains. But you've got to be careful, right? You know, if you're hearing me say this right now, I've been saying it since it was trading at $62 a share, right? So now it's at 90, whatever it is. Okay, so would I buy Marvell right now today as a trader? Probably not.
It popped up above $100 last week on this story, and it stayed there for about 2 hours. So there was clearly sellers above 100.
There are, and also the news from Softbank. You've got to remember the actual wording of the news. It said they considered. They considered looking at the company. They do due diligence on a lot of companies.
They couldn't agree terms, so it was a little bit more than that.
Yeah, correct. So I mean, listen, they might come back to it. Who knows? But I don't really care whether they get taken out or not. This is an organic story, and that leads on to the next subject, of course. Softbank selling their NVIDIA stock.
Well, and you mentioned the GPU accelerators there. The competition's heating up a little bit.
Yeah, that's a key story, I think. Listen, the GPU accelerator space is owned by NVIDIA, right? They have 93 or 92% market share, but you've got to remember that AMD also have the same technology, and OpenAI have endorsed them and shown the world that their technology is the same by giving them that gig. They've done gigs with Google, they've done gigs with AWS. But they have 7% market share. So that's AMD. Now we move on to Qualcomm. Qualcomm obviously don't have a GPU, but they are one of the smartest companies in terms of intellectual properties in the world, in the semiconductor space. They own the system on chip, the modem that controls smartphones. They own that market. And they are, if anyone's going to be smart enough to come up with a GPU, they talk a big game. They're telling us that they're coming after NVIDIA. My question is this. NVIDIA have 93% market share and are walking on water right now. You've got Broadcom, Qualcomm, and AMD coming after you. These are serious companies.
So it is literally 93% NVIDIA, 7% AMD, and
that's it.
very...
No one else.
Wow.
These other companies want to get involved in it, but they're not.
Right.
They don't have any market share yet. There's only 2 companies that make this very specific chip, and there are other chips within that space, but it's all about that. That's where the Blackwell chip is. That's where the margins are. That's where it's at. And there's so much to talk about this subject. I mean, you can go on to this depreciation story that Michael Burry's talking about.
Yeah. Well, that's because the big question is, and it's been apparent since Jensen did his strategy day about a year and a half ago, and he was talking Blackwell, and then we're going to have I forget the lady's name for the next chip. But when you buy one of these things, how long is it going to last? And it's impossible to see, because if you've got Meta spending $70 billion a year on CapEx, buying chips, but they're going to be redundant like our old TVs were, right? If you kept a TV for 3 years, 10 years ago, then you had to buy a new one, right? Is it going to be the same with chips? And therefore, should the depreciation be over 3 to 4 years and not 6?
Yeah. Well, I mean, this is the question that Michael Burry raised, right? I mean, he's basically saying that these guys are being creative with their accounting, not depreciating the chips enough, and therefore inflating their margins. And, you know, listen, Michael Burry is a very smart guy who does forensic accounting, and he has famously made his name is shorting the credit crunch, of the financial crisis. His timing is shocking. It was shocking then. It was shocking. It's always shocking.
2 years early.
The only thing that he timed, even when he goes long, right? He was massively long Alibaba. I completely agree with him on that. But he was also a year early. To be fair, so was I. But listen, this guy's very smart. The fact that he's publicly put on an enormous short position via the options market in Palantir and NVIDIA, going after the 2 big boys, is bold. It's punchy. It's got a lot of headlines. He hasn't randomly. He's not doing it for fun. He's doing it because he's done forensic accounting and he believes in what he's doing.
Yeah.
Now listen. So we need to pay attention to what he's saying. But you also need to take it with a pinch of salt, because he's got a position on. He's a smart guy. He's protecting himself through the options market. This can happen sometime between now and 2028. If you're naked short or naked long between now and then, a lot can happen, right? So you've got to put it into context. Personally, none of us know how long these chips are going to last. No one has the answer to that question. Yeah. So we're all guessing. I prefer to focus on what we do know, which is the competition side of the argument, and the capex, and what we can get our teeth into, and the positioning and the valuations, and trade around those variables, rather than having the luxury of putting on a 2-3 year options position.
That's the thing. Yeah.
So, you know, so it's interesting, but it's not tradable. We
got a question in the chat there. Has anybody ever mistaken you for Burry in the film The Big Short?
No, they have not. What, looks wise, I've got to hope not, but no.
Right, let's have a look at the chart of Oracle then, because it had that huge pop up on numbers. And I'll be fair to you, I tell you when you've had a shit call, and I tell you when you've had a great call. And this was a great call, because you told me not to touch it when it was trading at $300. It's now down to 237. What's your thoughts here?
Well, the gap filled, and if I had £1 for every time the gap filled, I would be a pretty wealthy bloke. I can tell you that. It's extraordinary. If there's one technical thing that you need to pay attention to in this world, it's the bloody gap.
Yeah.
It fills almost every time, one way or another.
So it's done it now. What's next?
So we're done. So I bought some yesterday, and it's for. One is the main, it's in the same category as Meta for me. Large cap, high quality companies that are oversold for the time being. It's a trade, it's an in and out. I'm wary of the balance sheet with this company.
Yeah, this is the big thing. The CDS is blown out, isn't it?
The CDS, exactly right. The credit default swap, for those who don't know what that means, has blown out. And you've got to pay attention to that, right? Why is Oracle trading like crap? Because AI as a basket is kind of going through a choppy motion, and they have a very dodgy balance sheet.
Take us through the dodgy balance sheet. Why have they got a dodgy balance sheet?
Well, because what they've had to invest in is capital intensive, right? It's the same as CoreWeave and Nebius, right? If you look at the balance sheet for CoreWeave, right? They've got $13 billion worth of debt on that balance sheet.
Yeah, we'll get onto that.
They've had to build data centers and buy the GPUs to rent out to people. Although they don't rent out GPUs, Oracle, they are setting up the data center infrastructure, which is capital intensive. It costs a lot of money, right? They've stepped away from software, right? Oracle are a software company, but what they're doing for the first time ever has involved spending money on physical things.
Yeah.
and that's costing them money. And listen, the growth rates are big, right? That's why the stock exploded. But then the market has had a moment where, and this is why, like NVIDIA, for example, has been the perfect name, right? And by the way, NVIDIA are starting to be massively they're spending a lot of money now. But NVIDIA have risen to fame because they've been such a low cost base and such high margins.
I'm in such two minds about this, because the first thought is, if the hyperscalers are getting all the chips, right, and they are using it, and we see what can happen with ChatGPT, right? Imagine what NVIDIA's got in-house. Yeah. And imagine that you've got all that power and the intelligence and you're doing incredible things, but you've also got multiple tens of billions coming through in cash. So you put those two things together, this takes over the world, in theory.
Yeah.
But it doesn't come back to shareholders. And so are you actually getting all this cash in, and then suddenly China's going to come and give you a thump, and you've burned all the cash flow, and your stock's at an insane rating?
Yeah, listen, they're playing a punchy game, and this is why Google's trading at an all-time high, and rock solid, because despite the fact they are an AI player, capex, because they are growing their capex in line with their revenue. They're doing it in a very disciplined way, and they're also going to turn a profit in 1 year in 2028, according to their projections, in the AI business. In their AI product versus, say, OpenAI. OpenAI are the kings of splashing money about, right? They've got $1.3 trillion of commitments. They're doing it in a very creative way, swapping warrants and God knows what with all their mates.
So it's not actually their commitment. What I read is that of that 1.3, half of it is in the likes of Oracle.
Yeah, exactly. So that's why these are very smart people with very smart bankers behind them who are coming up with the most creative ways possible, off-balance sheet stuff, to try and fund this expansion. And they may get away with it. I don't know. All I know is that the market has got to the point now where it's asking some questions about this. And if you sift through all of it, CapEx guys, the AI CapEx spenders, and Google has gone from being in the doldrums 4 months ago, where people thought that search was over and this was the end of Google, to them now being like almost bulletproof, dare I say. That's a scary thing to say.
It's the way they're trading, this thing did not sell off.
Them and Apple, by the way. But that's also a positioning thing, and it's the market searching for high quality companies that are not crowded, right?
That's incredible. So this is when the court case result came out, wasn't it? You had called it in there. You called it from 180.
No. Go back. I was calling clients at 130 on this thing, mate.
Yeah, but not me. I didn't
tell you about it. I only give you like 1/10 of my calls every now and then. If you put the chart out more, you'll see where it was.
I don't think I could handle any more than that.
No, cool. Yeah, I can imagine. I mean, you barely even pick up the phone anyway, so.
Yes, 2 days ago. Rich, this guy's really bugging me on TikTok. This guy calls himself Jesus.
Yeah, oh God.
How do I block Jesus?
Yeah, it's so good. Listen, 99% of the people on TikTok are just great fun.
Yep.
Occasionally you get one, their entire mission in life within that context seems to just be to piss you off.
And I love it. You take it personally.
Yeah, well, it's not personal. It's just irritating. So come in saying things that like you obviously haven't actually watched the video before you comment. Anyway, whatever. Google, Apple, high quality companies that are not crowded are rock solid, and that is very healthy for the market.
Apple new highs yesterday.
And Apple came out with a new little satchel, which is made by the same guy who designed the turtleneck for Steve Jobs, and that is not a joke, by the way.
That's a bit of you, isn't
what it? A ridiculous! Yeah, no, I wouldn't be caught dead in that thing. But can you imagine how ridiculous this is? This company, not only have they not innovated in forever, but they literally, it made headlines bringing out a satchel, which looks so awful, by the way, to keep your phone in. But you know why? Because their stores are packed and they're selling these phones and they are not caring. And by the way, they're doing a deal with Gemini and Google on the side. Google are now paying Google $1 billion a year to help them. They are quietly, not that quietly, doing the AI thing.
But he's going to look like an absolute genius if this all blows up.
I actually am getting excited about being long this company because I've never shorted it once in my life, despite I don't like it.
Yeah.
They always pull the rabbit out of the hat. They've got more cash than anyone. And let's be honest, you can say whatever you want about Steve Cook, but it's not like they don't have a hell of a lot of smart people at Apple. And a lot of cash. And they have a product with this trapped audience. And let's be honest, it's a great product. And they've got Google on board. They're not, even though they've rallied a lot, they're not crowded. They're not expensive. I mean, they are expensive, I suppose.
I'd be more comfortable selling downside.
I can't bring myself to buy it at this level.
That's the thing.
Can't
So
do it.
240, I'll sell puts all day long, but yeah, buying at 276.
But it's very hard to ignore what's going on with this company, right? And just imagine, and this is without any AI. Imagine if they put a phone in our hands that has all the AI that you require, and they dumb it down for everyone, which is basically what they said they were going to do about a year and a half ago. Then they stopped.
They were lying.
Well, they were, but like they've got a history of delivering this company.
So sorry, if things blow up and China come in and sort of, you know, the rest have all wasted $500 billion on capex, and their equity plummets, and Cook can come in and just buy something really cheap, he is going to look like an absolute hero.
Listen, that's the big question mark. They have refused to buy anything. They've got more firepower than anyone in the world. They could buy anything they want. And they've refused to do it. They've done it. They've also, you've got to take your hat off to these guys, right? They literally just said, no. On their last conference call, 5 months ago, everyone said, if you don't do AI, you're dead. That's it, right? They said, nope. We're just going to show you the iPhone 17 sales numbers, and on the call, we're going to say that we'll get around to doing AI.
We've got a new stock for you. So if you're watching on TikTok, come and join us on YouTube here, Trade Live with IG. Those of you that are watching for the first time, give us a subscribe, because Piers, for my sins, talking about Jesus, is on here every Wednesday. And what he's not been described as before is a bit of Shakespeare inspiration. You're not a poet, but the stock that we are looking at.
Oh, here we go.
Yeah.
Okay.
So Poet Technologies, what is it?
Shout out to Jacob. Look at him. What a hero. Right. So Poet. Listen, and this will get the viewers, no doubt, woken up from their chair after talking about Apple. Poet Technologies is a retail smack bang in the middle of the retail universe. You could literally write the script for what retail people will ask you about. There's 10 stocks on that list, 40 stocks on that list. Top 10, this is in it. Why is it in it? We'd be surprised if many of them could tell you the answer to that question. Some of them can, mostly due to the price action and the fact that it's exciting. But what do the company do? They're involved in photonics, which is a very frontier, next generation technology. There's only a few companies that are involved in it. It's essentially a derivative of fiber optics, and it's going to be applicable and applied to industries such as quantum and AI. And it helps it's basically to dumb it right down.
Yeah, please.
It's
from me.
using lasers to achieve the same results that chips used to do before. Essentially, it's using it's photonics. You could, if I sent you an AI answer on photonics, you would sit there just going with half the words you can't understand.
Correct.
So I'm not going to sit here on the show and try and explain it, but it helps the production of qubits in the quantum space potentially. There's a lot. It's a very frontier market and a very frontier technology. The applications are almost like it's at the very beginning of its life. Low. It's obviously trades on a ridiculous valuation, but I like it here as a trade because look, take the chart out a bit more.
See if I can. I'm not sure if we've had it on the platform long enough.
Yeah, probably not. See, that's a good example. I mean, IG have only just got it on the platform, so it's a very unknown. So listen, that chart almost tells the story. It's been, technically speaking, it's been waving and it's come back massively. Part of that has got to do with the fact that the market has just unwound all of these expensive retail stocks in a blanket trade. But yesterday, for example, loads of these stuff, whether it be Rigetti or OKLO, all these names, they were getting hammered, and Poet held up really, really nicely throughout the day. Most of that's to do with the fact they did a deal with a quantum company earlier on in the day. Listen, it's speculative, it's expensive, it's quantum, but it's back to an interesting level. And it's tradable.
Nothing to watch. What's the risk?
There's enormous risk. It can go to zero.
Okay.
All of the quantum companies can go to zero.
Yeah. Yeah.
If the market, if we find out in a year's time that quantum is not scalable, they all go to zero.
Take us through the results from Rigetti the other day.
Yeah, so Rigetti is a great example, and also just how beautiful is this, right? So this company was at trading at $52 a share the other day. That chart does not represent I find these charts quite difficult.
There we go.
So Rigetti was trading at 52, $55, $57 a share, whatever it was, and could do no wrong. And I started doing TikTok videos on it because I just looked at the numbers. It's insanity. They're losing $20 million a quarter on $1.94 million of revenue, and that's getting worse each quarter. So they've got so if you do it in percentage terms, they've got negative earnings growth of 400%, negative revenue growth of like 350%. And they have a market cap, or they did have a market cap of $17 billion.
Not anymore.
It's so ridiculous. Yeah, but even where it's trading now, it's about, listen, this stock's trading at 30, whatever it is.
31.50.
No doubt it'll have a bounce at some point because there'll be retail people trying to buy it. But it could, in a bad market, it can go to 10 and go right back where it started.
Yeah.
They don't have any business yet.
No.
Right? And there's a few of them like that. Like IONQ is the one that I've said many times before. That's the real company.
Yeah.
They actually have companies buying their product, and it's kind of like, and it's a product which kind of is starting to become a little bit more commercial. Albeit, let's be crystal clear, nothing is commercial about the quantum space, right? We're miles away from that.
You're getting asked on this one, IQE as well.
Where's that listed?
Any thoughts on IQE these days? Maybe.
Never heard of it in my life.
Okay, maybe it was IONQ.
You mean IONQ?
Yeah, could well be.
Yeah, that's the one. That's the one I'm just talking about.
Okay.
Yeah, so this is the one I like. And you'll see that this trades differently to the group, right? I saw that the other day we had D-Wave, QBTS, we have Rigetti. They were all down 5 or 6%, and this was up 3%.
Okay.
Right. Now listen, this is ridiculously expensive, and it's very speculative and very high risk. But these are the ones. If there's going to be an NVIDIA of quantum, in my view, it'll be this company because of what they do.
Okay.
Yeah.
Now, our queen of the viewers, Miss R. Saxena, is asking you on CoreWeave. She's had a fantastic morning because she's up 14% in Scottish and Southern Electric.
Wow, okay.
So there are some good stocks in the FTSE, Mr. Buckworth. But
the FTSE's doing well. It's full of value stocks.
I've got to say, the CoreWeave CEO yesterday was very unimpressive in his interview.
Well, listen, CoreWeave have got a couple of problems going on. One is the fact that they have a very dodgy balance sheet, as I mentioned before. And number two is the three problems. Number two is the growth rate was 350%. It's now 100%. And that can fluctuate, I'm sure. And that a lot of that. And he blamed this miss on lumpy orders from a data center partner, was his words. I'm sure that's true. Listen, the reason why I'm not touching this stock at the moment is because it's too young. Me, right? I like to see a company give us at least 3 quarterly earnings reports. Let the lockup get done. Let the technicals start to fall into place and start to get a feel for it. Otherwise, you're literally just gambling.
Yeah.
If you ask me what's going on with this company, I don't know, and no one else knows either, because it's too young. It's all over the shop. It's very expensive. It actually could get slaughtered.
Yeah.
Because the balance sheet's so bad. I've got clients who think it's going to zero. They're perma bears, but they're also smart people and they don't say it for fun. Right? It's a very dodgy stock. Okay. It could also completely rip. It's not something I want to be trading right now.
Yeah. You can be bearish about something that, like you say, you've got your VIP list, and the VIP list is obviously a lot of the Mag 7. Then there's the contenders to get on the VIP list. Yeah. This one gets ID'd at the door.
This one is not a contender to be a VIP. It's a contender to be considered as a serious. Listen, the investment community, the professional community, are not going to take this company seriously until they start getting the balance sheet under control and getting the margins going, right? But until that happens, professionals are actually pretty basic in what they do, right? They're like analysts. They buy things and sell things after the fact because it's too risky not to do that. They don't speculate much, right? Speculation is for retail people, right? Professionals are really boring, right? They wait for the earnings report, they do the numbers, and then they go, okay, right. And if they have to buy it 20% higher, they'll buy it 20% higher. but they'll prefer to have the backing of the fundamentals before they do it. So at the moment, the professional world are just going, I have no idea.
Is that why you call me boring all the time?
There he is. Yeah, well, you're very good at that side of the equation. Although you don't mind a punt, do you?
Now and again, it has been known. Well, so we've. If you are watching on the YouTube, please give us a thumbs up. Say thank you to Piers for coming in and actually having a shave today before he comes in. And we're coming towards the end of not the show, but the government shutdown. So let's talk about some economics. I know it's not your strong point.
I was lecturing you on macroeconomics for 10 years. Let's go.
When these job numbers eventually come out, what on earth?
You're such an old. Right.
What are they going to show?
Well, good question. I was reading it. I sent it to you. You didn't respond, which I thought was a bit sad, considering it was gold dust information I sent you yesterday, which was a report from and I will not mention the name of the investment bank, but it was from them, and it was a detailed analysis of the labour market, given the data that we have. And you'd be surprised how much data that there is out there if you actually are someone who does this for a living, regardless of the fact we don't have the headline prints for the last 2 months in the labour market. Although we've got the ADP, right? And ADP is now being given to us weekly. Do you know that? So, so that, which is it's quite noisy. But it was out again yesterday, right? And it was bad again. ADP, just for everyone who's watching, is a very, very poor guide for the non-farm payrolls, right? It never is. Sometimes everyone gets, but no matter what, every time it comes out, we all go, oh, that's interesting.
Well, because if there's no other data, you take what you can get.
Yeah, of course. But we don't have a non-farm payroll print. And according to the data that I've seen, the labour market's still quite healthy, right? And let's be honest, the bond market would have sniffed it out if it wasn't.
Yeah.
Bond market had a miniature wobble yesterday, so the yields came off on the back of the ADP. But bond market, I've never seen a period of time where the macro has not been talked about for such a long period of time. US dollar and 10-year is all I talked about for a decade. And now
there's 10 years, so 4.08. So when we got the rate cut a couple of months ago, we dropped below 4% for about 10 minutes. And then it's been around that 4.1 to 4.2, hasn't it?
Yeah, but the thing is the thing about the yields that people need to understand is it's the movement, right? It's the level is important, but it's the speed of the movement. It's always the speed of the movement. If you see the 10-year rip, for whatever reason that may be, and particularly where it is now, right? Because we're in a hot debate now about whether or not we're going to get a spike in inflation or we're going to get a labour market collapse. There's a huge macro debate going on under the surface of this market.
Big time.
And no one really knows the answer to it, and quite frankly, it could go in either direction. But if the 10-year moves aggressively in one direction or the other, which it hasn't in a long time, do you remember when we were going through QE and all these, and this massively 10-year driven market, right? There was always, all I spoke about, I was literally trading the NASDAQ off the 10-year. I haven't looked at the 10-year in weeks.
No, but I'm the same.
Which is so unusual for me. But I have a feeling we're going to start be looking at the rates again quite soon. And the dollar, right? The dollar's tried to get through the 200-day, and then it's rejected. And there's this narrative on knocking about in the retail world, and well, not just the retail world, that Trump's going to purposely trying to devalue it and going to whack stable coins in there and pull a big Trump card, pardon the pun, on everyone. I don't want to get involved in that conversation because it's just what it is. I don't have a strong view on the dollar, but beyond the fact that it's going to take a lot to take it down, but with regard to rates, that's what's going to drive the show. But at the moment, rates are being ignored because they're not moving. They're just sitting around. Market can handle.
They might move on Thursday because it looks like we've got this inflation number.
And that's a bit of inflation that we definitely need. I just need to pick up my microphone.
You go ahead.
Yeah, we need that inflation data badly because the market's been without that for quite some time now.
Yeah.
We didn't get the October print.
But it looks all right. The expectations for 0.2, 0.3, stable at the 3%.
Yeah, exactly. And again, there hasn't been a lot of movement, right? So it's so that's why the market hasn't really cared too much. But for my group of people if I can just quickly mention that, I'm looking forward to us having a macro time.
Yes.
Because since I had set up my Substack, I've got such a great group of smart people who love markets.
You've probably had it as long as the shutdown's been going on.
Yeah, but I've had it. We've been 4 weeks now, right? But I haven't. Macro has been irrelevant. And it's an interesting time because I can't wait for it to be relevant again, because we'll just stop talking about stocks altogether, because macro will run the entire market. And I quite like that.
That's been for years now.
I like that market though. I love macro, right?
Yeah.
I love it because because if you understand macro, you can just trade baskets of stocks and it's so much easier.
How would you explain the effect it has in sort of 2 sentences?
Well, I just think that so 2 sentences. First of all, the 10-year, let's just start with the stocks that everyone cares about and loves so much, which is tech and growth and duration. So duration, which for those of you who don't know what that means, that's focused on stocks that trade on the long end of the bond market. So in other words, if the 10-year yield which is the slightly longer end of the bond market, is rising, that is indicating that rates are going to be higher in the future. That means that the cash flows in the future of these companies that are relying on cash flows in the future are going to be lower, and therefore they
Especially the ones that don't make profit at the moment.
And that whole game has now been changed a bit, because during the QE changed the entire structure of the bond market. And then at the same time, we had the dawn of these high growth companies that we now call Mag 7.
Yeah.
Most of them are now mature companies that actually have value and pay dividends. So they don't really apply to the duration argument anymore.
No.
But the ones that do, take the top 20 stocks that you know of that trade on high valuations, but they've got high growth, right? Those are the ones that will get whacked if the 10-year rips. So, and it's a bit nuanced, right? Because there used to be all the big tech stocks that would get whacked, but now
This
some
was
of them...
the story of 2022, right?
Exactly right. But also everyone learned a lesson there, because we went from thinking that the likes of NVIDIA and Meta and Google would get whacked if the 10-year went up. But in fact, it's the opposite, because they're now safety plays. They're almost like utilities.
Especially Apple.
Apple is not a tech company, it's a utility. And if the 10-year rips and the shit hits the fan, Apple will be the one that gets the least hit.
Yeah.
Right. And that is a fascinating change in the way that the market structure has gone.
So, but then we've got this real dichotomy, and it is, right, AI's coming.
Yeah.
It's going to really screw up employment.
Yeah.
So unemployment rate is going to go higher, but at the same time, inflation could well be going higher as well. So the Fed, Jerome Powell must be thankful that he's about to hang up his boots.
Yeah, I think. Listen, I quite frankly, he's taken a lot of fire from Trump in recent times, but he's had a pretty good go, right? He's done a good job.
I think
he's the markets. He hasn't had any macro blow-ups. I mean, listen, if those of you who've been in markets for 30 years know about the potential macro blow-ups. I actually think they're quite fun. I can't wait for because it completely destroys what everyone's doing, right? And everyone has to go, oh, hang on a sec. Poet and NVIDIA and Palantir mean zero.
Yeah.
The big boys are in town. We're in charge now.
It's back to a trader's market. And at last Friday, we had a trader's market. Now, you and I didn't speak on Friday. I'd had enough of you by that point.
Yeah.
But at 4:30, I think we did exactly the same thing. You closed some of your QQQ short.
Yeah.
I closed my...
No, we didn't speak, but we did the same thing, yeah.
Yeah. And it just shows you that that level was so important, the price action was so important. What was it that made you on Friday just turn a little bit of your...
I got asked this, and listen, you know what I'm about to say better than anyone, right? When you've looked at everything for such a long time, your brain computes every part of it. Every part, you've got the macro in there. You've got the 20 variables that you need to make a trading decision are second nature, and you just pull the trigger.
Yeah, it's like driving.
It's literally like driving a car, and that is something that is very hard to. I don't need to explain it to you because you're the same. And the only way you get that is by doing this for a very, very, very long time. It's as simple as that. And I could go through the list of variables for you, but it's too long and it's too nuanced, and that's why that's the answer to the question.
Yeah. Great, right. If you do want to get on the Substack of Mr. Buckworth across here, then I'm sure Jacob will put up the link if... there it is.
Jacob, where is he?
It's in the chat there. Producer Phil's
number one operations and everything man in the world.
I have. He does. It's not just in front of your face. He speaks highly about you, Jacob. He also is very thankful when he's...
John Burke, what a hero.
Good stuff. If you're in from Pierce's Substack or the TikTok there, give us a follow, because he's not the only one that's got some good shouts.
Thanks, guys. By the way, love you all.
I
know all these people.
Shut up a minute, would you?
Yeah, mate, go.
I knew as soon as you walked in today, I knew you were going to be trouble.
Just got too much energy this morning, mate.
Right, well, if you want to see Piers in person, he's going to be in the Ned having breakfast with me because it's about time he bought it for the next 45 minutes. So
yeah. So listen, mate. Thank you. I love the story. Today's been one of my favourite chats because we get to talk about macro. I get bored talking about tech. I can't wait for us to talk about macro.
we need it back in our life, don't we?
I want it badly.
Yeah.
And I'm gonna. I can't wait to show everyone who's interested in markets about how macro works because it's fun.
You still happy with the name? Now it's Apex Army?
Yeah, I am. It's the best thing ever, and I'm just sticking to your guns. It makes so much sense now. Look at that, the Apex Army. Hey.
Right, that is us, thankfully, for today.
Thankfully,
Yeah, 20 past 9. Oh my, I've had to
we've
listen
had a
to
go,
it for
good
50
go, haven't we?
minutes.
Wow. I didn't realise the cameras were even on.
Right, yeah, give us a like and subscribe, and yeah, thumbs up for you all. Thank you very much for joining us today. It's been fantastic to get the thoughts of this one, but also the opening bell, seeing SSE. Let's see where it is before it goes. A huge day for the very first stock that I ever owned, Scottish and Southern Energy, now up 12%, and a true breakout on the chart. Go on the Scots. We'll see you tomorrow.
Oh, we got through the whole show without you talking about Vodafone. Which was up.
Are we still on? Right. Let's talk about Vodafone. Also a breakout. But yeah, jokes aside, it was what a cracking set of numbers yesterday. Look at these.
I'm shocked.
These UK stocks, the FTSE.
Yeah, well, UK's on fire because it's value and it's unloved and it's secretly just killing it. That's why. Yeah. It's the ultimate. UK is the ultimate stealth player. It's rock solid. It's like Apple, right? But it's just a whole index of apples.
And at the moment, it's not AI, and
it's got nothing to do with AI, and that's why it's high. AI, just to be crystal clear, is a dodgy place to be right now. It might be exciting. It might go up 10% today, but it might go down 10% tomorrow. If you want to lower your volatility and your heart rate, stick to. Well, I mean, that's pretty high as well, to be honest with you. But the FTSE is quietly having a renaissance, right?
Yes.
And this is exactly what's going on in this world. Gold, the FTSE, these are safety plays, okay? There's a noise over here. There's a big noise over here about all these speculative stuff. But the high quality stuff and the defensive stuff is all ripping.
Yeah.
And that's because professionals are putting their money into that. That's why.
Just having a quick look at the FTSE 250. Not yet.
No, well, that's because that's
needs the
spicy,
budget.
that stuff, right? That's not high quality. That's just.
We get a decent budget, and that could be the next one to look at. Right, poll results. We asked you earlier, what sector would you feel most comfortable owning from now through year end? And it was energy. Energy has been the top top result there at 30%, but very close.
Hang on, I'm sure. What time frame?
Through year end, so into
between now and year end. Oh, yeah. Okay, cool. Yeah, I'm going to go with a combination of biotech and pharma, which is I'll just put that in the same category. And what was the one you just said? Mining. What did you say? Energy. Yeah, I quite like. Listen, the energy companies, oil is just stuck. Right, but energy companies are most of them are making okay money right now.
Yeah.
The only thing about energy companies which is attractive is the fact that they are, lots of them are high quality, value, boring, stable companies that are unloved. So it's a positioning story. And but I think the market's going to keep rotating, right? I can't see how the market's going to suddenly grab back for more duration risk right now.
Can somebody please shut them up?
Well, you're the one that keeps going on. I want to go to breakfast.
You mentioned Vodafone. Right, we'll see you tomorrow. Thank you for joining us. See you next week.
You've got all these names for bad down moves. What about for up moves? Do you get a bull market, a double bull, a rampant bull, a raging bull? I mean, gosh, it's so exciting, all this stuff. I can hardly control myself.
For those of our listeners that have watched the movie The Big Short, so Burry's betting against NVIDIA, and Deutsche Bank is saying they might sell a basket of these AI stocks to hedge themselves. Just some echoes of 2008 there.
But let me give you a little insight into some of the terminology that equity investors use. You'll love all these, Rich, because they refer to when things go down.
Does that mean I get to eat my beard?
You get to eat your words.
Eat your words.
Your capital is at risk. The value of your shares, ETFs and ETCs can fall as well as rise, which could mean getting back less than you originally put in. This content is for information purposes only and is not investment advice. Past performance is not an indication of future results. Welcome to episode 18 of the UK's #1 financial markets podcast, The Art of Investing, brought to you by IG, the global investing platform. Now, we are going to take advantage of my good colleagues' experience here, Mr. CJ Fellingham and Mark Spice Holden. They've been around to see a few budgets in their time. And as the heat builds on Rachel Reeves this week, ahead of the budget in 3 weeks, we thought we would ask the gentlemen here, what happens if a budget goes wrong? Now, before we go on to that and looking at the portfolio review, we go straight across for the Spice Market Review.
Thank you, Rich. So it's been another difficult week for cryptocurrencies. They've had a real sort of fall. We deem it a correction, and I'll come on to explain some of the terminology that people use in markets. But crypto basically has had a correction, a 10% fall in overall, led by Bitcoin this time. There were many other coins that did a lot worse than that. And Bitcoin is now in a bear market for the year to date so far, which is pretty impressive. So that bear market is a 20% fall. But let me give you a little insight into some of the terminology that equity investors use. You'll love all these, Rich, because they refer to when things go down.
Does that mean I get to eat my beard?
You get to eat your words.
Eat your words. Absolutely. So equity guys will talk when markets fall between 3 and 5%. That's called a dip. Not a lucky dip, an unlucky dip, I guess.
And that's what you like to buy.
Exactly. I like to buy the dip, as many people do. And those happen about 4 to 5 times a year on average over the last 100 years. You get those sort of small pullbacks. They're considered quite healthy. When you get a pullback, which is the next sort of level up, that's a fall of between 5 and 9%. And those happen maybe once or maybe twice a year. And then you get a correction, which is what's just happened in the crypto market and Bitcoin. And that's where you have a 10% fall. And those happen again once every year or one and a quarter years. But anything more than a correction, more than 10%, gets to 20%. And that becomes a bear market where Rich can't stop smiling during bear markets. Now, sometimes you get a crash, which is a fall between 10 and 20%. But in a couple of days, it happens very quickly. And that can be very painful. And you could actually argue that the crypto fallback this week has been almost a crash. And certainly over the last month, there's been some pretty horrendous falls in cryptocurrencies. So I'd say Bitcoin actually entered a bear market for the first time this year, having fallen from its highs about 20%.
Mark, is this a latest fad to call market moves by names? I mean, if it goes down a little bit, it's this. If it's a bit more, it's that. If it's this, it's that. I mean, what is going on? When I was a young investor in short trousers, we never define things by this. The market goes up and market goes down, and that's all that's there. I mean, what happens if it goes down 45%? Is that a double bear? Or is that a polar bear? I mean, what is going on, Mark?
That's because they spoke Latin in those days. We developed the English language since.
Thank you.
Of course, bond guys never see big falls, do they? They just
so
go,
this is a bond thing.
Yields are rising, prices are falling. Yes, but they don't define it. But equity guys do. We've got, got to have some fun. We're optimists.
But this is something that's happened a lot in the old days. I mean, this isn't just a new fad.
No. I mean, I've been in the market about 40 years, and yes, it's one of the things you learn very early on when you start sort of covering markets. Yes, dips, pullbacks, corrections, and bear markets.
But it's really been since the financial crisis that this terminology of buy the dip has come in, because the central banks have always been there to assist you. So just buy the dip is a relatively new one.
Yeah, I mean, there's a whole generation of investors out there, professional and amateur, that have learned that every time the market pulls back and falls, 5-10% or whatever, it is right to buy the dip. I mean, this year we had a bear market in the S&P 500. It fell 20%. NASDAQ fell over 20%. Back in April, if you remember, when Trump introduced his tariffs, Liberation Day-led tariffs, the market fell 20% very quickly. But buying the dip then proved to be absolutely the right thing to do. Since then, the S&P rose over 30%, NASDAQ up over 40%. And there's, like I say, there's a whole generation of people out there have learned that every time it goes down a lot, it's a great opportunity. And, you know, even this week on Monday and Tuesday, they tried to get the markets down, and we'll talk about it later, but there are lots of high-profile investment bankers out there talking markets down and saying how expensive things were. The markets went down 1.5%, 2%, and buyers came in. And they've been buying for the last 2 days, and we're back up pretty much to where we started the week.
And so my last question on that would be, you've got all these names for bad down moves. What about for up moves? Do you get a bull market, a double bull, a rampant bull, a raging bull? I mean, gosh, it's so exciting, all this stuff. I can hardly control myself.
Well, a bull market is a 20% move higher, okay, right? And then, as you would often refer to, a bubble becomes things that are much bigger.
Ah, the bubble appears.
Yeah,
And
bubbles and bulls.
The bubbles after the melt up.
Okay.
Yeah.
All right, so let's...
so the bulls are always blowing bubbles.
Okay.
If you're a West Ham supporter, you'll understand that.
That's why. That's where it comes from.
That was the main feature of the week. As I said, it didn't really affect equity markets, but the market that did really well again this week was the FTSE 100.
Go on, the FTSE. Now, can we have hats made, Mark, for FTSE 10,000 before it gets there? I'm not sure we could get it that quickly because it looks really good to me at the moment.
Well, I'm looking into those hats, but I don't think the delivery times are quick enough, hopefully. But yes, no, the FTSE 100 hit a new all-time high. And that was helped by the fact that the pound went down again. There's still this seems to be a steady withdrawal of money from the UK ahead of the potential, the budget at the end of the month. And international investors particularly, running a bit scared. Interestingly, the dollar has been quite strong, and the dollar's moved up about 3 or 4% in the last sort of 6 weeks or so.
And that has hurt our commodity positions a little bit.
It has. But, we haven't done that badly considering this dollar has been going up. Because ordinarily, if you remember, when the dollar goes up, commodity prices go down, which I'm sure you're referring to there, Reg. Yeah. Talking about commodities, just because we talked about oil a couple of weeks ago, we don't have it in the portfolio, but it's just worth mentioning that OPEC and OPEC Plus, which includes Russia, had their meeting at the weekend, and they've decided to, as expected, increase their production a little bit more, only by less than sort of 1% of less than sort of 0.1% of the oil market in total. And now they say they're going on pause for the first quarter of next year, and their next meeting isn't until February. So the oil price now will just be open to the vagaries of normal supply and demand. Corporate results, we are still in the midst of the reporting season. It's been a pretty more mixed week this week, I guess. But overall, still results are net pretty good. And the ones that have been really sort of eye-catching, in the UK today, even today, we had BT, Sainsbury's and AstraZeneca. Remember, AstraZeneca is the biggest company in the UK. They had pretty good results. All the shares are up a little bit on the back of it, which is good, rather than being down a little bit, but not big moves. And the one company that disappointed today was Diageo, who own Guinness and Johnny Walker whiskey, etc. So a lot of you will have helping Diageo with their profits, but you're not doing a good enough job because they disappointed a little bit. But across the world, we've had very good results from the car rental company Hertz. And we've had good results from the banks. The banks across the world actually have had a pretty good reporting season. In this week, we've had them from Deutsche Bank in Germany, Santander in Spain, all pretty good, and their shares raised sort of 4 to 5% on the back of it. On the disappointing side, we've had Meta, who owned Facebook. Their shares have fallen about 17% over the last few days after their results.
That's right. What does that mean? That's not